We're jumping straight into Oklo today.
Right.
Everyone is watching the price action, but the real story is the massive shift toward powering AI infrastructure, specifically the new 1.2 gigawatt deal with Meta.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the nuts and bolts of this nuclear play, make sure you subscribe and hit the like button. It helps us keep bringing you these breakdowns every single week. All right, let's set the stage properly, because if you're looking at your portfolio today, Tuesday, January 20th, 2026, you're likely seeing a sea of red. It's pretty ugly out there.
It is.
And Oklo is taking a hit, down about 7% on the day, but, and this is a massive but, we have to zoom out.
You absolutely have to.
This stock has been on an absolute tear. We're talking up anywhere from, 238% to 300% over the last year. It is a volatility machine.
It is, and that volatility, it creates a lot of noise. It scares people. But our job today is to cut through that noise and really find the signal. And the headline isn't the daily price movement. It's this structural shift in how big tech buys energy. Oklo has effectively positioned itself as a proxy for the energy problem of the AI revolution.
So let's get right into the bull case then. Starting with this Meta partnership. We see headlines about partnerships all the time in the small cap world that are just total nothing burgers.
Hot air.
So why is this 1.2 gigawatt deal in Pike County, Ohio actually significant? Why should we care?
Because of the structure.
Yeah.
You're right. Usually these are just non-binding letters of intent, basically a pinky promise to maybe buy power later.
Right.
This is fundamentally different. It includes a specific framework for Meta to potentially prepay for the power. They could actually provide capital to fund the project development.
Which is critical, isn't it? Because Oklo is a pre-revenue company. They don't have cash flow.
Exactly.
So getting the customer to act as the bank, that stops them from having to dilute shareholders to raise cash.
Spot on. It validates the demand with capital, not just words. And let's talk about the scale. 1.2 gigawatts.
Yeah, what does that even mean?
To put that in perspective for you, a standard large-scale nuclear reactor, like those massive concrete domes you see, that puts out about 1 gigawatt.
Okay.
That's enough to power a mid-sized city. Meta is reserving that entire output just for their AI infrastructure in one region.
That is a staggering amount of juice for one company. It really shows how thirsty these AI models are, and they're building this on land Oklo already controls, right?
Right. 206 acres in southern Ohio. And this is a strategic piece a lot of people miss. This land was formerly owned by the Department of Energy.
Ah.
Oklo got it through the Southern Ohio Diversification Initiative. And why that matters is the local community there is already familiar with nuclear work. You aren't fighting those not in my backyard battles you might face somewhere else.
So you have the land, a paying customer, and a willing community.
It's a huge head start.
Okay, but playing devil's advocate here, why nuclear? Why is Meta going through all the headaches of nuclear regulation when they could just, carpet bomb Ohio with solar panels? It's cheaper and faster to build.
It is cheaper per watt to install, yes. But it fails the physics of AI test.
The physics of AI tests.
An AI supercluster, like what Meta has, runs at near 100% capacity, 2047. It never sleeps. Solar works when the sun shines. Wind works when the wind blows.
Okay.
The average capacity factor for solar is maybe 25%. For nuclear, it's over 90%. It's always on.
So to use solar, you need these massive battery backups, which just explodes the cost.
Exactly. You'd need a battery field that would dwarf the data center itself. Nuclear is the only carbon-free source that provides that steady, flatline baseload power that matches how a data center works.
It's the only thing that really scales. So let's talk money. We know they're pre-revenue, which is scary, but the pipeline numbers I'm seeing are getting kind of ridiculous.
They are. We're looking at a pipeline of roughly 14 gigawatts.
Yeah.
And that includes deals with data center giants like Equinix and Switch.
14 gigawatts. If they actually pull that off, what does that look like in dollars?
The revenue potential is massive. We're talking tens of billions over a decade. But, revenue's vanity, profit is sanity.
Right.
The number you really need to focus on is the unit economics. Oklo is targeting a production cost of roughly $1.50 per watt.
Is that good? Contextualize that for us.
It is very good. Traditional large-scale nuclear that often ends up costing $6, $8, even $10 per watt to build. Oklo is aiming to cut that by 75% or more. They become competitive with natural gas, but with zero carbon.
But how? How do they do it? This gets us to the technology, right? They're not just building a mini version of a 1970s plant.
No, and this is the secret sauce. It's called the Aurora Powerhouse. It's a liquid metal fast reactor.
Okay, liquid metal fast reactor. That sounds like buzzword soup from a sci-fi movie. What does that mean?
I know, it sounds wild. But think about a pressure cooker. A traditional water reactor operates under extreme high pressure.
Hmm.
That's why you need those massive, thick steel vessels and concrete domes to contain that pressure. Liquid metal. In this case, sodium doesn't need high pressure.
So you don't need the giant containment dome.
Right. You effectively delete the most expensive safety systems because the physics of the fluid makes them unnecessary. No pressure means smaller, simpler, cheaper buildings. That's where the savings come from.
And the fast part of the name, that refers to the neutrons. Basically, fast reactors are much more efficient at burning fuel. And this is the killer feature. Oklo's design runs on recycled nuclear waste. This is the part that feels like alchemy. They're taking what we all consider dangerous trash and using it as fuel.
Precisely. The U.S. has stockpiles of nuclear waste just sitting around, like at the Idaho National Laboratory. To a standard reactor, that's waste. To a fast reactor, it's still 95% full of energy.
Wow.
Oklo has secured access to this fuel, so their fuel cost is incredibly low,
Right.
and they're helping solve a national waste problem at the same time.
So you turn a liability into an asset. And I read these things can run for a long time without a pit stop.
Yeah. A standard plant shuts down every 18 to 24 months for refueling. The Aurora is designed to run for 10 to 20 years on a single load of fuel. It's like a battery. You turn it on and walk away for 2 decades.
Okay, so that's the electricity business. But I was looking through their filings, and there's this subsidiary called Atomic Alchemy. It sounds like a comic book villain's company.
It does sound dramatic, doesn't it? But it's actually a very grounded and very smart other business line. They signed a deal with the Department of Energy to build a pilot plant for radioisotopes
Explain that. Why do we care about isotopes?
because they are incredibly valuable and in short supply. We use them for medical imaging, cancer treatments,
Yeah.
and right now the U.S. imports a lot of this from Russia, which is obviously a huge geopolitical risk.
So this is a sovereign supply chain play?
Exactly. It taps into a $200 billion market that is completely separate from selling electricity. It's a high-margin hedge for their business.
The tech sounds great, the customers are real, but who's actually putting money behind this? What's the smart money doing?
The institutional backing is heavy. You have Sam Altman, the CEO of OpenAI, as the chairman. That just reinforces the link between AI and nuclear.
Right.
But more recently, just this month, we saw Cathie Wood's ARK investment increasing their stake pretty significantly.
And what's the total institutional ownership?
It's hovering around 85%.
Yeah.
That is very high. It tells you the people with the best research teams have high conviction here.
However, and there is a big however, we have to be realistic. Let's shift gears to the bear case. What kills this company?
Okay, yeah, we have to look at the other side. The biggest risk is simply time. It's the execution gap.
Right, we talked about billions in potential revenue. The revenue today is what?
Zero, effectively zero.
Yeah.
They are burning cash every single day. And while pre-construction starts this year, the first electrons likely won't flow until late 2027 at the absolute earliest. Frankly, 2030 is probably a more realistic target.
So you have a 3 to 4 year valley of death where money just goes out and nothing comes in.
Exactly. The meta prepayment helps. But if costs balloon, which they almost always do, they might have to raise more money. That means dilution for current shareholders.
And the biggest gatekeeper here isn't the customer, it's the government.
The Nuclear Regulatory Commission.
Yeah.
The NRC. This is the final boss. The NRC is arguably the strictest regulatory body on Earth, and their whole rule book was written for those giant water-cooled reactors.
So the regulators have to kind of figure out how to even regulate this new thing while they're reviewing it.
Essentially, yeah. It's a first-of-a-kind license.
Yeah.
And Oklo actually got an application denied a couple of years ago because of this. They're re-engaging, but the risk remains. A delay from the NRC could push the timeline out by years.
And every year of delay is a year where a competitor might catch up.
Right. First mover advantage is only an advantage if you actually move.
Let's also talk valuation. The stock is up 300% in a year. Is there any margin of safety left?
Very little. The market has priced this for perfection. It assumes the tech works, the NRC says yes, and the plants get built on budget. If any one of those things falters, the stock will crash.
It's a binary outcome.
It really is.
Speaking of confidence, let's address the elephant in the room. The CEO, Jacob DeWitt, sold stock recently, about 200,000 shares worth over $18 million.
It always looks bad, doesn't it?
It does. When you're a retail investor and you see the captain selling $18 million worth of stock, it makes you nervous.
And that's a fair reaction. But to be fair, that sale was only about 12% of his total stake. He still has most of his wealth tied up in the company.
So it could be for taxes or diversification?
It could be, but it definitely dampens sentiment and gives the bears some ammunition to work with.
Okay, so we have a clear picture. Huge potential, huge risk. If you're listening, what are the specific things we need to watch in, say, the next 30 days?
All right, there are three things. First, the Q4 earnings call. It's probably coming late January or early February.
And we're not looking at earnings per share, right?
Ignore the EPS. It'll be negative. Don't even look at it. You need to listen for the cash discussion. Details on the meta funding. How much cash is coming in up front? That determines their runway. That's the only number that matters.
Got it. Number 2.
Regulatory progress. Watch for updates on their license application, the CLA with the NRC in the first quarter. We're not looking for a final approval, just a progress report. If the NRC says they've accepted it for review, that's a massive de-risking event.
And finally, are we looking for actual dirt moving?
Yes. We need to see confirmation that they are physically preparing the ground in Pike County in 2026. That moves it from a PowerPoint project to a real construction project. Seeing bulldozers is a catalyst. I'd add one more wild card, the copycats. Oh, absolutely. Meta broke the seal. Now we watch Amazon, Google, Microsoft. They all have the exact same energy problem. If one of them announces a deal with Oklo or even a competitor, it changes the entire landscape.
So to wrap this up, Oklo isn't really a utility company, and it's not really a tech company. It feels more like an option contract.
That is the best way to frame it. It is a call option on the future of AI energy. It's a binary bet. If they get the license, they become the ExxonMobil of the 21st century.
And if they don't?
There's a science experiment that ran out of cash.
And the time horizon here is not next week.
No. If you can't hold this for 3 to 5 years, you shouldn't be in it. The day-to-day volatility is just noise. The real thesis plays out over the next half-decade. You have to be willing to ride the roller coaster.
There you have it. The full breakdown on Oklo, high risk, high reward, and sitting right at the intersection of atoms and bits.
Definitely one to keep on the watch list.
Thanks for tuning in to the Easy Money Show. We'll catch you on the next one.